Yeah.
Morning, everybody. It's the 7th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning all.
Everybody all right?
All good, thank you.
Average.
Average to middling. Okay, so pretty incredible scenes overnight, which has taken all the headlines today, and that is the Trump supporters storming the US Capitol building late on Wednesday, forcing lawmakers and staff to seek shelter and disrupting the certification process of the president-elect Joe Biden's victory. Ended up with 4 people dying, according to the news. 1 person shot by the police, while 3 others died due to medical emergencies, which is a little bit unsure. As we were joking offline, they probably put that down to COVID. But yeah, I mean, incredible, unprecedented. A word that we've heard a lot over the last year.
Some of his staff is threatening to resign, aren't they? This morning.
Who's staff?
Trump's staff.
Well, they've only got a job for another 13 days, haven't they?
I'm going to say on the back of him inciting the riot, basically.
Yeah, I mean, his video was incredible, wasn't it?
He didn't do a lot to help, did he?
No, watching the news, obviously Biden come on and sounding all very presidential, demanding Trump say something, and then he come on and just like, you need to go home now, but we love you all. Just like, what are you doing, mate?
They've stolen it from us, but we just got to let it go.
Yeah.
Bad.
So I don't know if that's the end of it, or whether or not we'll see more. I mean,
You'd like
maybe cast into doubt the actual inauguration, because if those guys can get anywhere near what the inauguration, then could be a bit of a shit show, couldn't it?
Yeah,
dangerous.
Doesn't surprise me.
Yeah, very dangerous.
Lunatics.
Yes. Anyway, didn't really help markets either way. I mean, it sort of, markets just feel insulated from all this stuff at the moment. It didn't move at all, really. Just waiting on the stimulus checks, I guess, keeping it all propped up. FX markets, bit of flip-flopping around in the dollar index, as I'm sure Ian will come up to. So I might as well hand that over to you now, Ian, and you can run us through your thoughts on that and the charts today.
Yeah, well, I'm a bit miffed, to be perfectly honest. But we got that decent move up in the morning after sort of testing the swing lows, and then, as Joe's just said, it didn't hold. It's come all the way back down. I'm now unsure, completely unsure of where this is going, which obviously build our customers full of confidence. I think you could quite easily get down to these sort of levels. I think you need a breakout of the range up here at 89.80 to sort of confirm that sort of semi base is in place. But if you look to the upside, there's so many different swing highs and swing lows that have held as support and resistance, that I think even if you do sort of break higher, I don't know if it's going to be impulsive. I think you're going to need a decisive move lower in stocks, and I don't think that's going to happen at the moment. I'm just looking at S&P 500, and I can't see anything in the way of sort of any upside barriers for about, what was it? Let's have a quick look. Up here, really, which is another 100 ticks, which is a decent sort of percentage move in this index. So I'm a bit miffed to really what's going on, but let's have a look at the majors. Like I said, you've got a potential wedge formation, but I really would wait for a breakout of the base, which is around about 122.58. This is on euro dollar. It's a 4-hour chart, because if not, then I think we break higher and we can move up to here, 124.37, which is 261.8% extension level. This chart still looks quite scary for the long-term outlook for euro dollar, or for negative US dollar, I should say, because if we sort of if we do get up to that level and then we breach it, then the next level is up here at 132.15. So really, it's a pretty critical time, I think, for the US dollar and for the dollar majors at the moment. Cable, I still like this pattern. I mean, if you look to the daily chart, we're going nowhere, are we? We've had sort of 4 days of little net movement. Yesterday was a doji candle. and then the dip's been bought into this morning. And again, they're really hard sort of patterns to trade, I think, at the moment, because you could look at this and say, well, that just looks like a descending triangle formation, but then this upside rally this morning looks pretty strong, and if it breaks this sort of zone, then the next zone is here, 138.95, and I think with the dollar at the moment, I think this is more prime than a break of the downside. But you really need, again, I think at the moment you need to see a break of that downward trending line and a solid break of it to contemplate longs, or you need to see a break of this support to contemplate shorts. So not sort of building with much sort of confidence at the moment. Yes, we saw a sort of correction to the upside off this cipher pattern, but again, it's just the rallies look weak, and without getting higher highs and higher lows, I'm very skeptical about whether or not we'll just push down to here. This zone down here, 87.24, 87.09, which sort of starts to get down to these sort of big picture fib levels. 88.67 is not a million miles off. So, like I said, you really got to break out of ranges, I think, at the moment. Dollar CAD, again, like a lot of the dollar majors, sort of decent move to the sort of upside yesterday. This is the 4-hour chart, but they're not being sustained, these rallies. And I think basically we've got about another 100 ticks to the downside for dollar CAD. Aussie dollar, and it's one that I have sort of favoured. But again, sort of the dips have sort of just been bought into. There's no sort of decent outside bars. We're not getting evening doji stars. It's all looking pretty shite as a reversal, and I think we're going to sort of move up to these levels here, which is 79.75, 80.61. One or two currency pairs that I thought were quite interesting this morning. Euro New Zealand, I'm still looking to see if this holds, but again, if you can see, just morning trade got outside bars being posted, so I think you're going to have to screw down right into sort of shorter time frames to look for potential reversal patterns before trying to take a long, and it's off this cipher pattern, which is 82.70. But one that was looking like it's gaining a fair bit of momentum is this sterling Aussie. Again, I think the sort of big pictures are sort of pretty mixed. These are no sort of decisive levels until you get down to here, but I think we could see a bounce higher off this sort of double bottom formation. If you look to different time frames, 8 hour, 4 hour, and I won't go down into the smaller ones, but they're all posting bullish outside bars. So that's looking quite positive, with cable running up, or sterling running up to that confluence area. And then Aussie dollar, I don't think it's got as far to go. So as a correlated pair, that's looking quite good as well. That's about all I've got. Confused.com I am at the moment.
Okay, great. Thank you. Steve, what do you make of the indices at the moment? I mean, just looking at a snapshot now, obviously the FTSE's been outperforming, but that's taken a bit of a big old reversal this morning. I'm sure you'll come on to that, but yeah, Steve, take it away, mate.
Yeah, just sort of like picking up on the dollar bear market. Do you know the last time the bear market happened in the dollar? Well, I've got it on the screen now.
1985 to 1992, by any chance?
Yeah, and 2002 to 2008. These are the dollar bear markets, and obviously we started another one now, 2020. This is a friend of mine, Gary Portugal, who I used to work with. He's liked this story from Thilo Marot's. Despite the current clear positioning against the dollar, this chart by Jordan Roy Byrne suggests a much longer bearish trend could happen. That's where we are. That's where we are at the moment.
I'll stop calling a buy then, shall I?
Well, I sort of like.
There's a couple of bounces in there.
Yeah, there's a couple of. Look, you can get it here.
Yeah,
but that's about a year away.
Yeah.
But yeah, it's. I think it's good. Gary's always comes up with nice, different
I like that.
stories, and it's
I
sort
don't
of
like that, but
yeah, puts things into perspective, I suppose. Because like, you know, dollar dollar index, if you said it was going to go down to 50, everyone would laugh at you.
I think
So-
the fact that our currency traders still going to be looking at it as a safe haven. I think.
Well,
I think
that's
I think that's the big
That's the danger,
question
isn't it?
as well. Yeah,
I mean, after
because
the
they're just printing money, aren't they?
yeah, and it's
I
not
mean,
backed up by currency, by any sort of fundamental gold. You know, there's nothing. It's just paper, isn't it? It's just thin air. A bit like cryptocurrency. It's just like, well, it is. It's all
the new
nothing.
safe haven you're talking about.
Well, that's it. It's nothing really. There's nothing that exists behind it to sort of like say, here you go. Here's your cryptocurrency. There's not even a note or anything. So that's even more of a sort of like hot air in a bottle without the hot air and without the bottle. Anyway, let's get back to.
We offended a lot of people this morning. We've already had a few comments
I don't
about
care.
our.
I don't care.
Trump
What are they going to do?
comments.
What are they going to do? Storm the hallway? Are they? Come on.
So
They'll meet a bit more resistance here than they did yesterday. So yeah, looking at the FTSE, we've had a bit of a reversal this morning. Again, a little bit of a pullback. I think someone was questioning, you know, we've got a buying a dip down at these levels. Someone was like questioning us on that. We're looking we look for real value areas to sort of like get into trades. Now, after a move like we saw yesterday and the day before, that the value areas are obviously a lot lower. It just makes sense. It doesn't make sense to sort of like just be you know, waiting for the small intraday levels. You've got to look for maybe a bit more value.
Yep.
On the ones I've really sort of thought were interesting, I think it was down here, Hong Kong. Yes, Hong Kong on the weekly chart. Obviously, we talked about this yesterday. It's broken above and clearly closed above last week and looking to close, breaking this downward trending resistance level. So that's positive. China, no stopping it, continues to sort of like reach for the stars, and that the Nikkei as well holding up nicely. Aussie, we spoke about this, Joe, the other day, didn't we?
Yeah,
said you were sort of like looking for a bit of a topping pattern in that the daily chart, and that sort of
and
like,
you went with the trend continuation, which
yeah, which looks like, you know, we're still seeing the momentums, the negative momentum slowing, so potential for the upside. So I don't think anything is going to hold back these indices. There was talk of obviously the news from the states that were waiting on in Georgia, and whether this meant this would be negative for the tech sector with Biden. But Biden obviously relied on a lot of the tech sector to get to where he is today. So although we've had a bit of a dip, bit of a pullback, I expect it to get bought again. So yeah, that's the one that's really benefited out of this stock rally. But so it's going to be slowing down. Obviously, we do see sort of bearish divergence, so be aware of that. But there's plenty of time to see what will pan out. Let's talk about oil, because obviously I had a winner in the gun to hedge yesterday, but you can see a couple of times, even here, sort of like nearly got stopped out, and it rallied, nearly hit the target, and then nearly got stopped out again.
yeah, that 9 o'clock close was horrible.
Yeah, what was that? I was like, they must have sort of been trying to get me out.
Definitely trying to shake you out for sure.
I mean, it was only 5 pips away. My stop was at 49.40, only 5 pips away, and then it sort of rallied all the way back in that last hour. So it did give me a positive result on the gun to head. So, but I think crude oil, we're sort of continuing that move higher. And looking positive this morning. You know, it's $51 trading above the $50 psychological level. That'll turn into, and it'll also turn into a bit of a sideways technical level where we had the previous swing high at 49.40. So 49.40 to $50 I see as support now. Buying dips to there would be a good risk reward value. On the gold, we sort of obviously saw the gold sell off aggressively yesterday. Bearish outside candle, so that's negative, and we're hovering around about the close of last night, 1920. $1,900, again another psychological level to look for. Should find a bit of support down there. It's whether we can sort of extend lower from this negative candle yesterday, and there is potential for that. So we're on the hourly chart, we're below the Ichimoku cloud, so there'll be here we get the sell signal here when the lines cross over in here. So yeah, but if you look forward, resistance is coming in around about 1930 really. So a short-term strategy of selling into rallies around these levels, buying into dips around these levels looks like the play. But again, I'd be little bit careful on the a little bit more of a corrective move lower, having this sort of like completion of the ABC D leg.
Lovely. Great, thanks, Steve.
I might have to just drop off to. I've got a call in a second, but I'll gun to the head while you're.
Yeah, well, if you want to get yours ready, and we'll go straight to you. So yesterday, Steve, you saved the day, as you mentioned, on oil. You had a winner of 1.35R at the 9 o'clock close. Could have been better if we extended the trading hours a bit more, but this is the game. So 54 ticks to the good. Ian and I were both stopped on both lost on dollar index. I was stopped out. Ian, it was looking pretty good for you at one point, but as you touched upon with your charts, it's really difficult to call at the moment, and the flip-flopping around meant that we were both in the red at the end of our trading day on the gun to the head challenge. So we did make a tiny bit of money yesterday, certainly not enough to make any kind of dent in the overall P&L graph at the moment. Obviously, we're still nicely ahead, but could really do with pushing on, nailing a few winners, which I'm positive that we are going to get very soon. Steve, did that give you enough time to find a trade?
It did. I'm selling gold at 1922, stopping at 1930 and targeting 1902.
Fantastic. Steve, if you need to jump off, please feel free to do so, and we'll catch up tomorrow.
All right,
okay, so Steve's selling gold. Ian, have you got a trade ready?
Yeah, I'm going to go for that. I'm going back to basics, so I'm just going to use these outside bars as a trigger. I'd prefer to get long here, 174.78 or 174.65, as their previous resistance and now become support levels, but we are breaking higher and it's going to the head, so I shall take them here. I have to move my stop in a little bit, so I'm getting long at 75.12, stop at 74.38, targeting that fib up there, which is the 61.8% pullback of the last decline, which is 1.85. Bit weak on the R, but that'll have to do.
Yeah, I'm with you. It's challenging out there still. I'm looking at sterling as well. I highlighted sterling Swiss on my analysis when I just had a flick through a moment ago. Potentially a bit of a range here on the hourly chart. So we've obviously got some resistance up here at 121.00. Potentially a small little bottom formed here within this range formation. A nice breakout today. Ideally, I'd be buying on a pullback to 119.81, but the gun's to my head, so I've got to do it now. I'm buying at 199.95. Targeting that move to 121.00, placing a stop below the low of this candle that we posted between 7 and 8 o'clock this morning, which will be at 19.47. So just a shade over to our 2.27R for me on that today. So there's our 3 trades. Steve's going short of gold. Ian and I both looking at sterling Oz for Ian, sterling Swiss for me, both going long. In terms of data today, we've got Eurozone PPI at 10 o'clock. Then we've got German CPI at 1 o'clock, followed by the harmonised figure as well at 1 o'clock. That's all the high impact data today that I can see on the calendar.
PPI, I don't know, that's right.
PPI.
We've got retail sales and we've got CPI.
I've got Eurozone PPI on the calendar as well at 10 o'clock. Is that right?
I can't see that. I'm looking on FX Street. It's got retail sales, consumer confidence, consumer price index, industrial confidence.
Okay, we've got obviously initial jobless claims in there as well, which is a medium importance, and that is a precursor to obviously non-farm tomorrow. I said we've got ISM in there today.
Yeah.
Okay, it's not shown on my calendar for whatever reason.
Yeah, Fed Evans this afternoon at 6.
Okay, and then non-farm tomorrow.
I'll be around by them, but yeah.
No.
And then lovely little
cluster of data tomorrow.
100,000 they're expecting. A build off.
Okay. We shall see.
Indeed.
Okay, well, thanks for watching if you were tuned in, and we'll be back tomorrow morning. Good luck with your trades in the meantime, and all the best. Take care.
Yeah. Yeah, all the best. Cheers.
Bye.